It's about the Iranian exports. Now, the war with Iran is creating an unprecedented windfall for US oil companies. With crude prices now hovering around $100 a barrel, the sector is expected to see a massive surge in profitability. Before the conflict, when oil was closer to $55 a barrel, US producers were generating roughly $62 billion in annual free cash flow. At current price levels, the number is projected to jump to nearly $163 billion. A year, in effect, the industry could see more than $100 billion in additional annual free cash flow if prices remain elevated. Analysts estimate that elevated oil prices alone could add roughly $5 billion in extra cash flow for US oil companies in just a single month. This is turning the global geopolitical crisis into one of the most profitable operating environments ever seen for America's oil industry. A key reason US oil companies are benefiting is the country's largest domestic shale industry, which has limited direct exposure to Gulf supply disruptions. Much of America's production comes from shale basins such as Permian spanning Texas and Mexico. Local economies in major oil regions are already seeing the effects, with increased drilling activity driving higher employment, stronger retail spending and rising tax collections. In many oil towns, elevated crude prices are translating directly into stronger economic activity. But while energy companies in oil-producing states benefit from higher crude prices, consumers are facing the opposite effect. Rising oil prices feed directly into higher gasoline and diesel costs, pushing up transportation expenses and adding pressure to inflation. Higher fuel prices also impact airline tickets, shipping costs, and the price of goods across the economy. Unlike past oil shocks, however, the United States is now one of the world's largest oil producers, which means a portion of the price windfall remains within the domestic economy. That creates a complex dynamic. While households brace for rising energy costs, US oil companies are experiencing record cash flows. In many ways, the Iran conflict is producing a two-speed impact on the